Alrighty, good morning, everyone. Hope you guys are doing well and had a good long weekend. Today is Tuesday, September the 2nd. It's a brand new month, a brand new week here as well. Hope everyone's doing well. Good morning, everyone. We'll have a decent amount of red folder news coming to this week. You can see so far the overall market is gapping down here, spying cues underneath key levels. A couple names showing a little bit more weakness here. So we'll look at these names here in a second and what we're looking at coming into this week. Before we do that, good morning. What's up, everyone? Good morning, I am Hartik. Good morning, Maud. What's up, Jeff? Good morning, JT. Easy. What's up, B Roots, Monty, Victor? Good morning, Ryan, Arnold, Tata. Good morning, Wayne, Cinna, 50, Hugo, Darth, Eileen. What's up, Jack? What's anyone using trading? Yeah, primarily TradingView, TWS as well. Good morning, Robert, Juan, Brett, Ming, Daniel. What's up? Random. I'll answer that question here in a second. What's up, Philip, Ashley, Norwin, Andreas, Jen? Yeah, what's up, everyone? Good morning. Yeah, hope you guys are doing well. First things first, let's go on to the weekly outlook and see what we're looking at coming into this week for September the 2nd to the 5th. Let's kind of scroll down here. First things first, what we have is the key economic events. So, key economic events coming into today, what we have is ISM. So we have ISM manufacturing. That's going to be at 10 a.m. Eastern Standard Time. With this gap down, we'll see how it affects the market, but most likely we don't have too many big red folder news events. We just have these smaller ones. As for Wednesday, similar thing at 10 a.m. once again. That is going to be the JOLTS opening. That's tomorrow. And then on Thursday, we have ADP non-farm enrollment, unemployment, along with ISM services PMI. And then on Friday, we do have some more red folder news. That's going to be at 8:30. We have the non-farm enrollment. So you can see almost every single day we have a decent amount of red folder news here. We are dropping here in the pre-market, but that's just something to keep in mind. As for some earnings, basically majority of earnings are already over. We had Nvidia last week, which was a huge news driver in the overall market. Now we just have a couple smaller ones, right? Dollar Tree, Macy's, right? Broadcom if you trade that on Thursday. But let's just go right into the chart. So now let's go on to what we're looking at here on the daily time frame. So thesis for this coming week. Right now you can see that ES just hit your level. Right now you can see that ES just hit your all-time highs level. Nice reaction off that level on Friday to end off the month. The higher time frames are still intact. What I like to see moving forward is the reaction that we have off of your 6508 here on the higher time frame. So if you go on to the daily chart here for the ES, you can see we recently just hit your all-time highs. Let me actually just get rid of this. Go back onto the daily time frame. As you can see, we just recently hit your all-time highs key level. This was on Friday. We gravitated towards your all-time highs, your 6508. And now you can see we're having a little bit of reaction off this level. What we actually have is some divergence. ES hit your all-time highs, NQ lagging behind and showing a little bit more weakness, and this is one that's actually dropping. So for the ES, we're recently coming off all-time highs. We're actually still fairly bullish, but the key level now for ES is kind of going to be this low right here, which is where we ended up gravitating higher. So for the ES, let's go back onto the 1-hour chart. You can see the key levels that I have marked out is really this level. You can see we have multiple touches, your 6460. Multiple touches here on Friday and in the pre-market here as well. And now you can see so far we're breaking underneath this key level here in the pre-market. So we broke underneath this key level here in the pre-market. The next level towards the downside is our 6430, and we're actually showing a little bit more weakness here as well. So for the ES, the next level here on the higher time frames is going to be the area that we broke up from on Friday, which we can mark out this level, and then we can also mark out essentially this double bottom, which is going to be the 6360. So moving forward here for the ES, especially coming to this morning, what I like to see is the reaction that we have off of your 6430. If we maintain underneath this key level, we can expect continuation towards the downside. So levels that we can have marked out here for the ES coming into today Now we can drag out this level, which is essentially going to be our 6,400. And then we can also mark out this low, which is all the way back down in towards our last week's low, which is our 6,363. So these are the levels that we can have marked out. I might have to refine these levels a little bit later here on the ES, but basically what we're going to now be looking for, at least coming to today, is going to be the pop and fade. So you can see some over the long weekend, showing some weakness underneath your Friday's lows, showing some weakness in the pre-market. We're going to be looking for the pop and fade coming into market open for this continued push towards the downside here on the ES coming to market open. For the SPY, similar thing here. Recently just came off of our all-time highs. SPY recently just hit your all-time highs here on the higher time frames. You can see this one had a mini pullback on Friday. What I'd like to see coming to next week is the reaction that we have off of your 646. So for SPY, similar thing. You can see a nice reaction here off of our all-time highs. Now underneath that 648, and now you can see we're actually underneath your 644 here as well. So pretty big pullback here coming into market open along with Friday here as well, underneath multiple key levels. So for the SPY, you can see even dropping more recently. So for the SPY coming into today, key levels that we could have marked out is going to be our 637 and then all the way down in towards that 632. So coming into today, very similar thesis as the ES. What we're going to be looking for is that first pop to be shorted towards the downside. Since we have a very big push lower, we're not going to expect it to just have a V-shaped recovery on a Monday. So what we're going to be looking for is that first pop to look for continuation towards the downside. So key levels that we have marked out is number one going to be this 639.50, and we also have this 641.50. So as you can see here, price is pushing lower. We're underneath key levels. Potentially, if price can pop up in towards your 641 for continuation lower, but now most likely with this bigger drop here on SPY, we're going to have to use this key level, which is going to be your 639.50. So now, as long as SPY can maintain underneath this level, potentially we can be looking for a pop and fade off of your 639.50 for this continuation towards the downside. Okay, let's go on to the NQ. This is the main one for continuation lower just because the NQ has been showing a lot more weakness. So daily chart on the NQ is looking weaker than the ES. You can see that we're having divergence on the daily chart. ES at highs, whereas NQ is lagging behind. This is where, there has been a tech rotation the last few weeks, making tech lag behind. What I'd like to see moving forward is a reaction that we have off the ES previous all-time highs, and now the NQ reaction off of your 23,800. I see actually a few comments here. No, it should be good. Okay. Sorry, is there any sound? It should be good, right, guys? Let's see. Frames still looking good. Yeah, if you guys can hear me, just type one in the chat. Or majority of the times, if you can't hear me, most likely it's probably on your end and you just have to reset the stream. But it should be good here. As for the NQ, you can see higher time frames, a little bit of reaction right off our key level. So for the NQ, if we remove this, you can see reaction right off our key level, which is our 23,800. And now you can see we're pulling back here, back down in towards the area that we jumped from. So as you can see, NQ showing a little bit more weakness. We talked about this for the past couple of weeks. Sounds good. All right, perfect. So yeah, we talked about this for the past few weeks here, that the NQ has been a lot weaker than the ES. You can see ES, we hit your all-time highs. So this is basically, it made a new high. So for the ES, we made a new all-time highs, whereas the NQ, we have divergence. So as you can see, the key levels that we have marked out, 23,800. If we go on to the 1 hour chart here as well, the key levels that we have now is going to be this 23,440, and we have all the way back down in towards this double bottom, which is going to be this basically this 23,080. So this is the key level you can see for the NQ. Breaking underneath key levels of support, you can see how many touches we have on Friday here as well. And in the overnight session, you can see so far in the pre-market, we're breaking underneath this key level. So now what I'd like to see is really for the NQ to gravitate down in towards this key low, which is going to be this 23,080. And you can see we're actually dropping quite a bit here in the pre-market. I'm going to see if there's any news, but basically we're dropping now, continuing to push towards the downside. And now you can see the next level on the higher time frames is going to be this 23,080. 23,080. So for the NQ, if we actually go into the 15-minute chart, this is where we can expect the market to gravitate towards coming to market open. If price is already down here by the time market opens, I'm going to be a little bit more cautious on the short side. But if we consolidate, or if we even have a pop coming to market open and we haven't hit our key levels, being that 23,050, then we could be looking for markets to gravitate towards this level. So this is going to be the key level coming into today. It's fairly clear. It's going to be this 23,050, or this general area here, the higher time frame double bottom for the NQ. If we go onto the QQQ, let's go into the 1 hour chart here. You can see similar thing, right? There's divergence on the higher time frames. This one's showing a little bit more weakness compared to the SPY. So we're going to be looking for the Qs to gravitate down towards this key level first. So you can see for the QQQ, your level of support last week was your 570. We have multiple touches in this area. Broke underneath it here on Friday, and now you can see underneath it in the pre-market continuing to push towards the downside. Levels that I have marked out is really your 560 here on the higher time frame. So for this QQQ, if you just zoom out here on the 1 hour chart, this is what we're going to be looking for, is primarily any sort of pops to fade down in towards your 560 here on the higher time frame. So this is going to be the key level for the QQQ coming into today. So your 570 here on the higher time frames, and then we also have your 560, 450. So this is the level for a potential pop and fade for a push down in towards that 560. So for the SPY, right, this one's lagging just a little bit behind, right? The Qs is the leader towards the downside. So we're going to primarily be watching the NQ and the QQQ for a push down in towards this double bottom. And then there's a bunch of these tech names that are looking a lot weaker here as well. So I'll go over these in just a second. Let me grab some water. All right. What's up, everyone? Hope you guys are doing well. I see there's quite a few people in here. If you guys are enjoying this, appreciate if you guys drop me a like so far. As always, if you guys haven't joined the watch list, that one is in the description below as well. So let's go into some tech names. So a lot of things to go over on the tech side, since we are dropping almost 1% here on the Qs. A lot of these tech names are going to be showing a lot more weakness here as well. So for the for Tesla, first things first. As you can see here on Friday, we're looking for continuation towards the downside just because they're showing a little bit more weakness. Now for Tesla, if we look at the daily chart, we're kind of just right back in between this range we have established. So we're just going to be looking for trades on the lower time frame. So let's go into the 15-minute time frame here on Tesla. You can see we're showing a lot more weakness, or a little bit more neutral now. Past few sessions, we can see a little bit more continuation towards the downside. Underneath your 344, end up looking for continuation all the way down and towards your your 335. And now you can see in the pre-market here as well, dropping underneath your 335 and continuing to push towards the downside. So for Tesla coming into today, the key levels that we have marked out is going to be your 328 along with your 320 here on the higher time frame. So with a lot of these names dropping here in the pre-market, what we're going to be looking for is essentially that first pop to be shorted towards the downside. So you want to see if the markets can essentially have like a pop and fade within the first like 10 to 15 minutes of market open. So for Tesla coming to today, you can see right into a key level support, which is this 328. Your next kind of levels that we can be looking for is kind of all the way back up and towards your previous day highs. So for Tesla, what we're going to be looking for is a few opportunities, potential kind of pop and fade off of your previous day, not your previous day highs, your previous day lows, which is your 332 for continuation towards the downside. Another scenario here is consolidation underneath your 328 for this continued push down in towards potentially your 320 here on the higher time frame. So that's what we have for Tesla coming to today. We're going to be looking for the pop and fade or consolidation, kind of this opening drive towards the downside. So we'll keep an eye out on Tesla. As for NVIDIA, this one, I do like it. Actually already took out one of the key objectives, which is your earnings low. So this is a key level that we've been looking for. Next levels towards the downside is going to be this 169. So for NVIDIA, you can see recently rejected off of your all-time highs on Friday, a little bit more weakness towards the downside. Now we're underneath your earnings low, which is key, 172. So as you can see here for Nvidia, this is your earnings low. What we like to see is a few things here. We also have your 169 key level. We like to see pop and fade off of your earnings low for continuation towards the downside. Or now for Nvidia, it's really going to be underneath this 169. So I'd like to see pop and fade, or now it's going to be underneath your 169 hold for this continued push towards the downside. So that's what we have for Nvidia coming into today. This one does look like it can have a potential bigger pullback here if you can get underneath that 169. So if we zoom out here, just a little bit on in the NVIDIA daily time frame, you can see a lot of consolidation in between this 168 and this 184. If we could potentially break underneath this 168 and hold, there's actually a lot of room towards the downside here. So I wouldn't be surprised if NVIDIA does have a little bit more weakness and breaks underneath on the daily time frame, your 168. Potentially we can see some more downside, so keep an eye out on Nvidia. As I mentioned, the key levels that we already have marked out, it's going to be this 172 earnings low, and then we also have this 169 here, which is a very key pivot level here on the higher time frames. If you go into Apple, this one still looking fairly strong, not as bearish as the overall market, but key levels for Apple now is going to be your 233.50, and then we also have, it's going to be your 230.50. So for Apple, if you go into the 15-minute time frame, key levels I'd like to see for Apple reclaim is going to be back above your 230.50 for this continued push towards the upside. Only way I'm leaning a little bit more bearish is if it drops right off the bat, holds underneath your 230, and then we could be looking for a little bit continuation lower. But not as interested in shorting Apple just because this one showed a nice little strength last week compared to the overall indices. Now let's go on to AMD. This one finally looks like it's breaking underneath its key level, which is our 162. So for AMD, let me actually just refine these levels here. What we have is our 162. We also have this key pivot low here as well, which is your 159. So for AMD, zoom out just a little bit here. You can see we have key levels of support, which is our 158. This is the level that we'd like to see hold here on the 1 hour time frame. If we can't hold your 158 and we get underneath your 158, there's potential we could see some more downside here down in towards that 150. So keep an eye out on AMD and some of the semiconductors coming into this week, especially with NVIDIA earnings last week, and it was showing a little bit of weakness. I wouldn't be surprised if AMD gets underneath that 158 and we see a little bit more continuation towards the downside. So that's going to be the key level coming to today, 158. Underneath 158, we could see some more downside here on AMD. So keep that in mind. Let me just mark this out. As for Meta, this one does have a daily gap, and we're now pushing towards the downside here as well. So for Meta, if we look on the daily time frame, you can see Meta is slowing down here on the daily chart. As you can see, right off the key level support being that 740. This is the level that you need to see hold if you want to see a move towards the upside. If we break underneath this level, we could possibly see the gap fill towards the downside. So for Meta, you can see right here, we have a key level support being that 740, right? Previous all-time highs. And now if we break underneath it, which so far we are here in the pre-market, the next level is going to be all the way down in towards that earnings high, which is your 710. Let's go back onto the 1 hour chart. You can see right here, breaking underneath a key level support in the pre-market, which is your 735. What we'll be looking for here now is going to be the pop and fade underneath your 735 for this continued push towards the downside. Now the levels that we could have marked out is going to be that full gap fill. So we can mark out your full gap fill, which is your 708.40s. And then we can also mark out this level here as well, which is going to be your 724.50. So we have a couple key levels here on Meta coming to this morning. The fact that we're underneath your gap fill here now, what we'll be doing is looking for primarily all pops to be shorted towards the downside, right? Potential kind of pop and fade off this daily gap underneath your 724. We could also be looking for continuation towards the downside here. So that's what we have for Meta coming into today, key levels. As for Google, let me go on to this one. Let me go on to Amazon. Let me go on to the daily chart. Thesis right now, you can see that Amazon is right around this daily gap that we had back from earnings. what I like to see is a reaction that we have off this level. If we want to see a break back above, we need to see a close above your 232. So for Amazon, just a lot more consolidation here. Now it's pulling back with the overall indices. Key levels that we have on Amazon is our 227. You can see so far showing a little bit more weakness. Underneath that 227, the next levels that we have is going to be all the way back down in towards our 221. And then we could also mark out this level here as well, which is going to be that 223.50. So for Amazon, key levels that we could have marked out, 221 here on the higher time frames. And then we could also mark out kind of this level, which is going to be that 224. But for Amazon, coming into today, key levels, really going to be that 227. If you do want to stay heavy, primarily going to be looking for the pop and fade coming to market open for a push down in towards that 223 and below, which is going to be that 221. So that's what we have on majority of these names coming into today, at least the names that we do have marked out. Google recently coming off all-time highs, and then Microsoft pulling back a little bit here as well. So coming into this morning here for the overall markets and some of these tech names, what we're going to be doing is looking for that first pop to be shorted towards the downside, down in towards especially this double bottom here on the Qs. Right, this is going to be key, your 560, and for the NQ, a little bit more clear here, but you can see it's going to be your 23,050 here for the NASDAQ. So that's going to be the key level that we can expect the markets to gravitate towards. And then for the rest of the tech names, we could be looking for a similar thesis kind of with the pop and fade coming to market open, especially on the semiconductors, since these ones are showing a little bit more weakness, and Tesla here as well. Okay. If you guys do have any charts or any tickers you'd like me to go over, I will go over those now. We do have some red folder news that is going to be at, I think, 10 a.m. today. Let's see. Yeah, 10 a.m. we do have ISM. So no red folder news in the pre-market, but we do have some at 10 a.m. All right. Yeah, if you guys do have any charts or any tickers that you'd like me to go over, I'll go over them now. If you guys are enjoying this so far, I appreciate if you guys drop me a like and sub. If you guys haven't joined the watch list, that one is in the description below as well. Okay, let me take a look at this. Good morning. What's up, everyone? Nice and sunny weather in Poland. Nice. Yeah, I'll check that out. How do you draw key levels using wicks? So I'll draw it from the wick to the body, since that's what's relevant. Especially if you're drawing zones, you can draw it from the wick to the body. If you're drawing just lines, sometimes you have to choose what's best fit, right? You can draw the bodies or you can draw the wicks depending on what's best fit. In this case, right, I like to draw zones, so I'm just going to draw that whole area since it is relevant. I want to thank you for taking time to make this lives. Appreciate that. Let's see. Do you take overnight gaps? Are you talking about overnight like gap fills, or what are you talking about? Yeah, we trade gap fills here as well. So let me go into SMCI. So SMCI, this one's dropping here underneath key levels. Some levels that we have marked out on SMCI now is primarily going to be your 43, which you can see dropped on Friday, 41.50 underneath this key level here as well. Now for SMCI, we're going to have to look all the way back left. So you can see this one after earnings, big push towards the downside. Now the next levels is really kind of this key level of support, which is your 40 key psych. If you get underneath this, hold underneath, there is potential we can see a little bit more downside here, down in towards your 38 and potentially your 34 here on SMCI. Since this one is showing a little bit more weakness, key levels that we're going to have marked out now is just going to be your 41.50. If we maintain underneath your 41.50, we can expect continuation towards the downside. If we reclaim back above, we can probably see a little bit of a mean reversion, but that's only going to occur back above your 41.50. Qs and SPY, already went over those. You guys can scroll back on that. As for Snow, this one recently just is starting to break out towards the upside. We had earnings recently. Now we're looking at this one. It's basing. It's looking very nice. You can see we had an IPO back from 2020 earlier. Now we're getting back above this IPO low. The really only key level that matters here is kind of this IPO low. So we can draw this out as a whole area here on the weekly time frame. which is basically your 220. We're back above your 220. Now this is the level that we like to see hold if we want to see continuation towards the upside. So we have your, sorry, it's your 210 and this 220 general level. And then on the daily chart, we can mark out this, which is going to be that 238. So for snow, coming into this week and on the higher time frames, I personally like to see it maintain above your 238 for a push up and towards your previous day highs along with your last week's highs, which is your 250. So snow looks really good with this earnings big push towards the upside. Other levels we can have marked out here as well, which is going to be this 228. So one of two scenarios, either the dip down in towards your 228, or now it's going to be the reclaim back above your 238 for this continued push back towards the upside. As for Palantir, seems like I removed a bunch of these levels here, but for Palantir, we can just quickly redraw a bunch of these ones. Key levels that I have marked out will just be your low that we created on Friday. You can see we have multiple touches in this general area. Other levels we could have marked out. Let's just mark out this level. And then we can mark out now it's going to be that 150. So for Palantir coming into today, the key levels that we have marked out is your 153. We also have your 150 here. So showing a little bit of weakness underneath your previous day lows, your Thursday's lows here as well. What I like to see is the pop and fade off of your 153 for continuation lower, or now it's going to be underneath your 150, hold underneath for this continued push all the way back down and towards that 143. So these are the key levels for Palantir coming into today. If it does want to show some continuation lower, I'd like to now see it underneath that 150 hold for a potential push. Now it's going to be all the way back down in towards that 143 if this does want to have continuation underneath that 150. If we go into hood, similar thing here. Key levels that we can have marked out is just going to be your previous day lows, which is going to be this 102. The next levels towards the downside is really all the way back down and towards that 100 key psych. So for hood coming into today, what we like to see is really a maintain underneath your previous day lows, 102 for continuation towards the downside. So this is the key level that we have marked out on hood. If we do want to see a push down in towards that 100 key psych, it's going to stay heavy underneath this 102. As for a few other tickers, SoFi really is the one that's holding up. We still have your all-time highs, still holding up compared to the overall market. We are pulling back now, but eventually, once the market does look to bounce, SoFi is going to be one of the leaders back towards the upside. But in this case, key levels that we could have marked out is just going to be this key level, which is your 25 key psych. So your 25 key psych, you can see nice kind of break and retest, but now ultimately showing a little bit more weakness. It's going to have to reclaim back above this key level if you want to see any sort of continued pushback towards the upside. Okay, let me scroll down here as well. Let's see. Do you exit on the break or candle close if it is a loss? So I'll exit on, primarily I always exit on the candle close, or it's the point of invalidation. So wherever it invalidates my trade thesis is where I'm going to cut my position. Good morning. What should we be aware of on trading days with a lot of news? Just we have to be aware of the news in itself. A lot of the times, what will happen is the moves will occur after these red folder news events. So we just have to be aware. So something like 10 a.m. If we have 10 a.m. red folder news, then we most likely will wait for that kind of first 15 to 30 minutes to develop, and then we'll wait for that red folder news for the market to pick a clear direction or for it to have a potential reversal. So just keep in mind, if you're in any trades, right, there is 10 a.m. news. If you aren't in any trades, then you probably just want to wait for that 10 a.m. Red folder news event. Okay, let me scroll down here for gold. So gold recently hit all-time highs as well. So gold, we talked about this one just kind of consolidating here for a while, and the potential break eventually towards your all-time highs if we can get above key levels. But as you can see, gold, right, building up these higher lows, broke above your key pivot high. Essentially, we're building up liquidity to both sides. But once we broke above, now you can see this nice push all the way up and towards your all-time high. So for gold, anyone that does trade gold, you can see once it started trending, that's when we have these nice moves in the market. You can see break above our key level, retest, break again above our 3,400, and then another kind of break and retest for continuation towards the upside, and recently just hit your all-time high. So for gold, recently just hit your all-time highs, which is your 3,500. Now what we like to see is for continuation, break back above your 3,500, hold for this push up and towards your all-time highs and above. So that's going to be the key level that you're going to mark it out if you are trading this. It's going to be your 3,500, and that's going to be the key level moving forward here as well. CRWV. So for CRWV, if we go into the 1 hour chart, just a lot more consolidation. The key level that we do have marked out is this low here, which is your 102. So your 102 here, very key. We can just kind of drag this over. You can see how many touches we've had. Not able to get above and hold above this key level. So that's why we're showing a little bit more weakness here. So for CRWV, we can just draw this key level of resistance. If you want to see some upside above your 102 hold, so far we are rejecting off this level. So showing a little bit more weakness now. What we like to see if you want to see some downside underneath this 97.30 for a continuation lower. Why is the market bearish? Overall, right, SPY recently hit your all-time highs, right, coming into a brand new month here as well. So majority of the times at the very start of the month, we'll usually head lower before we head higher. And then for the Qs, showing a little bit more divergence. So we have a tech rotation that we had a couple weeks ago. So for the QQQ failed to make a new all-time highs, where SPY hit your all-time highs. So that's a good sign of the market starting to be a lot more weak, especially if the tech's not leading. If if Nvidia, Tesla, or any of these tech names are leading the market, that's a good sign for a healthy market. If the tech is lagging behind, that's a good indication that most likely we're going to have a bigger pullback in the overall indices and the market as well, especially if tech is not leading. Okay, let me go over some more tickers here as well. When entering a trade, how many days until expiration? So we'll usually look for weeklies, and then we'll look for one out the money or one with the most volume. If we're swing trading, you look for a few weeks out. If you're day trading and looking for intraday setups, it's a little bit different. So for LLY, you can see recently hit your gap fill that we created, earnings gap fill, a little bit of rejection off that level. Now we're just right back down in towards our 720. So 720 is a key level of support. If you can hold this level, potentially we can see this gap that we created over the weekend back up and towards your 730. If we show a little bit more weakness here, that's going to be underneath your 720. We can see some more continuation towards the downside. So that's going to be the key level that you're going to mark out coming into today. Other levels that you could have marked out is just going to be your low that we created here on Thursday, 726. Okay, let me go over a couple more tickers. IWM recently pulling back here as well, just with the overall market not pulling back as much, but for the IWM key levels that we have marked out is your 234, and we also have your 231 here as well. So for IWM, a little bit of a pullback here. What I would like to see now is really this level of support hold, which is your 231, or I'd like to see kind of the reclaim back above your 234. So for IWM, if you do still want to see continuation higher, it's going to be that hold of your 231.50 for a move, for a potential move back towards the upside. Is the VIX moving higher? So yeah, that's correct. So VIX, you can see is spiking here because the overall indices are dropping. So these are inversely correlated. So whenever the market drops, right, the VIX is going to spike, and this is good for volatility. So whenever the VIX spikes, right, what is it good for? It's good for day trading. Primarily, it's not really that good for long term, and it's not really good for swing trading, but it's best for day trading because there's going to be volatility when the indices drop, right? VIX spikes. So you can see VIX spiking correlated with kind of the Qs and the overall market dropping, and that's why you can see this one's rising. So for the VIX, right, we can expect this now to potentially gravitate up and towards 20. That's going to be the key level that we have. What's the website to see red folder news? It's called Forex Factory. Okay. Let me go over my top watches coming into today, and then I'll go over a couple more tickers, and then we'll call it. So for the Qs and SPYs, I mentioned game plan is still going to be intact. We're going to be looking for the push down in towards your really this 560 here on the higher time frames. So for the Qs, I like to see really maintain underneath key levels, which is going to be your 564 for continuation down in towards that 561 and below. As for the SPY, this one's showing a little bit more weakness. Sorry, the keys are showing a little bit more weakness, but now the key levels here on SPY is going to be your 537. And then, of course, this level, which is a little bit farther away, is your 632. As for the NQ, the key level is going to be this 23080. So we like to see really the markets maintain underneath, right, up close candles or underneath this key level for the potential pop and fade for a push down in towards that 2380 coming to market open. And then for the ES key levels that we have marked out, your 6408, and we also have this 6430 here. So at least for Monday, sorry, at least for a Tuesday, we're going to be looking for that first kind of push towards the downside right off the bat, since it is showing quite a bit of weakness here on both the SPY and the Qs. As for my main watches today, primarily going to be the semiconductors, NVIDIA and AMD for a bigger pullback. As for NVIDIA, the key levels that I have is going to be this 172 along with your 169. What I like to see is potential kind of pop and fade off of your 172 for a continuation lower, or now it's going to be underneath this 169 for this push towards the downside here as well. So NVIDIA going to be my main watches. I do like NVIDIA, sorry, I do like AMD as well underneath your 159. So if you can get underneath 159, hold underneath, there's potential we can see some more continuation lower just because it's a very key level of support. Right now, I like to see this level be used as resistance for continuation lower. So primarily it's going to be the semiconductors for continuation lower. As for SMH, you can see we can expect it to gravitate towards the low of the range. As for Tesla, the key levels that we have marked out is going to be this 328. So 328 underneath now, 328, either kind of this pop and fade for continuation lower, underneath 328 hold for now, this push down all the way towards this 320 here on the higher time frame. So that's what we're looking for here. Coming to market open. As for the rest of the tickers, not as interested. I actually do like Meta here as well for this potential full gap fill. So we'll keep an eye out on that. And then for the rest of the tickers, Apple somewhat still holding up compared to the overall market. Similar thing as Google just recently came off their all-time highs. Microsoft, this one's a bit of a slower move, but this one higher time frame still bearish here as well. So that's what I have coming into today for the major indices along with these tech names. Let's read the chat here. Yeah, so those are my main watches. Are we aiming for a reversal? No, we're not going to look for a reversal, at least today, since the overall higher time frames now is starting to flip. As for the SPY and Qs, at least not until we hit a very key level. If we hit the key level already here coming to market open, we're going to be a little bit more cautious towards the downside. But if we don't hit this key level, then we could be looking for that pop to short towards the downside. So that's what we have coming to market open. And really, that's about it. So for today and now the rest of the week and moving forward, since the market is pulling back here and the tech is showing a lot weaker price action, we're really going to base it off of intraday price action here with the VIX spiking. We're primarily going to be looking for intraday setups, and we're going to take it day by day instead of looking at the higher time frames, since a lot of the higher time frames now are pulling back here on the higher time. They're pulling back on the higher time frame, so we're going to be looking for more intraday setups and just looking for, right, taking it day by day, as I mentioned. So that is going to be it for me today. We do have some red folder news at 10 a.m., so we'll see how that affects the market. But overall, we are going to be looking for that 590, 559 here on the Qs. And then for the SPY, we're going to be looking for that 537 here and below coming to market open. So that is going to be it for me today. Keep an eye out on the semiconductors for a little bit more weakness. And then, of course, Tesla as well around this 328. As for the rest of the names, we want to just keep an eye out on your previous day lows and any other key levels that we have on the chart. So I am going to get ready for market open here now. As always, if you guys did enjoy that, I appreciate if you guys drop me a like and sub. If you guys do want to join the watch list, that one is in the description below. And as well, if you guys want to join trade live with me every single day, that's also in the description below as well. So that's going to be it for me today. It is a short week, so that's something to keep in mind, plus a lot of red folder news. I do expect a decent amount of volatility, since you can see the spike is rising. Sorry, the VIX is rising, and then you can see the market's pulling back. So we're going to have a decent amount of opportunity coming into this week, and I expect moving forward into the end of the year as well. So stay ready. for those nice setups. And I will see you guys all tomorrow morning. All right. Take care, everyone. Have a great rest of the day. Peace.